Hey, everybody. Happy Wednesday. Happy Hump Day. Thank you so much for joining us for another Food for Thought Wednesday. I do have quite a few things to share with you, so I hope that you will check it out. And as always, welcome your questions and comments as we're going through some of the things that I wanted to share with you today. I wanted to talk to you about birthdays. And yes, birthday may make you think about cake and candles and having your friends and family over. However, I'm talking about very different birthdays today. As you are planning for retirement, as you are approaching retirement, and as you are enjoying your golden years, there are some key birthdays that I want to bring to your attention so that way you can keep an eye out on them as you kind of go through your life journey. So I have a list for you. My suggestion to you is so that way you're not constantly thinking about it and it's not rattling in your head, is just for you to go ahead and put them on your Google Calendar and set it as a reminder. Or if you're using a paper planner or a paper calendar, then you can add these dates as important dates with some notes under them, so that way you're just being mindful, as remembering these dates is important in your planning process. So let's jump in and talk about what these are. So the first birthday that I want you to be mindful about is your 50th birthday. It's going to be cake, candy, and catch-up contributions. So when you turn 50, you now, according to the IRS, are able to do some catch-up contributions. And most of that applies to 401ks, 403bs, most 457 plans, and the federal government's thrift and savings plan. So in 2024, the regular contributions are up to $23,000. And individual contributions to the IRAs are capped at $7,000. And those that participate in the simple 401k can defer up to $16,000. So if you are 50 and older and your plan allows, you can make catch-up contributions in 2024 of up to 7,500 employer-sponsored plans. For the IRA, catch-up contribution is $1,000, and the limit for those with the simple 401ks is $3,500. This is a great opportunity for you, especially in my mind, especially for the Roth IRA. If you can contribute an extra $1,000, imagine all that money is going to go in your accounts tax-free. So that's a little tidbit there. The next one, we're heading to another 5 years after that, and we're going to look at your 55th birthday. So if you are thinking about retiring on your 55th birthday, then you need to get to know the rule of 55. It is the IRS provision that enables workers that have reached that age and leave their job for any reason to start taking distributions from their current employer's retirement plan penalty-free. Note that not all employer plans allow this rule of 55 withdrawals, so you need to check with your plan rules before you're going to take action. In addition, this rule of 55 only applies to your most recent employer's plan, and then plans that are from previous employers are not eligible. So if you want to kind of figure out if this could be the right move for you or not, you need to talk to your tax advisor or financial advisor just to understand the tax implications. All right, now we're going to head over to the half birthday gift, which is age 59 and a half. That's the only half birthday that is important for you to know. So you are 6 months away into your big 6-0, and this is an important birthday. So what happens is at age 59 and a half, you can start withdrawing from any of your qualified retirement plans or IRA plans penalty-free. So if you're still working, you may be able to take money from your 401k. Some employers offer this, and it's called in-service withdrawal for employees aged 59 and a half and older. So check with your plan administrator if you're still working, so that way you can determine if this is an option for you. If an in-service withdrawal is not an option, you can still access funds in your 401k plans from your previous employers or your IRAs at age 59 and a half. The next birthday is a number 62. And this is where we are talking about officially an opportunity for an early retirement, because that is when you can start claiming Social Security benefits. But of course, if you do claim them early, that means you're going to get less money each month than rather than if you were going to wait, which is, yes, it's a big debate. Should I claim early? Should I wait until my normal retirement age? Or should I push it off until the age 70? And I can tell you that it's going to be different circumstances for each of you, depending on what plans you have in place. I did a great video on trying to figure out, should you retire sooner than later, that I can link in the notes for this program. So that way you can take a look, where I offer my thoughts on, should you do it earlier? Should you do it on time, or perhaps wait a little bit? So if you are waiting until your full retirement age, which does vary by your birth year, your benefits will increase by about 8% until you reach the age of 70. So if you're also working while receiving Social Security, your benefits may also be reduced depending on if what is that break that you're under your full retirement age. There's going to be some withholdings. So definitely take a look at it. I also did a video on the Social Security benefits as well that you can check out. Next up is going to be your 65th birthday. And the tagline here is "to your health." And that's because you're now eligible to receive Medicare. So I encourage you, as you're making plans, to learn Medicare ABCs, as I call it, because you have different plans and they have different letters. You need to know and distinguish which ones make sense, which ones you have to sign up for at a certain time, and distinguish between all of them. So it's an important deadline to remember, because waiting to enroll could result in a coverage gap and even penalty. So your first opportunity to enroll in Medicare starts 3 months before the month in which you turn 65, and then it ends 3 months after your birthday month. So this is where writing it down so that way you don't forget, and putting it in your planner is very important. Once you turn 65, you can enroll in Part A, which covers inpatient hospital care, skilled nursing facility, hospice, lab test, surgery, and home health care. You are entitled to this benefit even if you have employer health insurance, and this is a no cost to you because you worked and you contributed to this when you were working through the Medicare taxes. If you are already collecting Social Security benefits, you will automatically be enrolled in Medicare Parts A and B. Part B covers doctor's visits, outpatient care, some medical equipment, home health care, and other services like preventive care. You can choose to decline Part B, but if you aren't covered by an employer's health plan and decide to enroll later, you could face a penalty. So you definitely want to learn a little bit more. I did a great video with a Medicare insurance specialist. He talks about all the different plans, and he also dives in a lot deeper into, in our conversation, into supplemental plans, which ones are good for which person. So I'm going to link that video for you to watch as well. A lot of my clients found it very helpful. Next up is going to be a flexible celebration. It's your full retirement age, FRA. And the reason is because it depends on your birth year. Right? So sometimes around your 66th and 67th birthday, you will reach what is called the full retirement age. And this is the age at which you can receive 100% of your Social Security. And your exact age is going to depend on the year that you were born. So there is a nice table that you can find on the Social Security Administration website that you can take a look. If you were born before 1954, and including 1954, your full retirement age is 66. And then after that, every year from 1955 and on, it increases by a couple of months. So if you wait until the age of 70 to receive your benefits, you will receive delayed retirement credits for each month you delay filing beyond your FRA, which enables you to lock in larger income stream, because as you know, it increases 8% per year when you postpone beyond your full retirement age over your lifetime. Also, the cost of living is also going to increase, and it's going to be larger. That's because while all beneficiaries receive the same percentage increase, you would be starting with a larger benefit. So yes, it's food for thought, that is for sure. Your half birthday. okay, so we have another half here too. At 70 and a half, you give a gift and you get one too. So when you reach the age of 70 and a half, you can begin making direct transfers of qualified charitable distributions, or QCDs, to a qualified charity from your traditional inherited inactive SEP or inactive simple IRAs. So why is that important to you? Is because when you make those from any type of the IRA except from the Roth, you could exclude the amount you donate from your taxable income for federal purposes, effectively lowering your taxable income without having to itemize your deductions. And this is something that you definitely want to talk to your financial and your tax advisor to see if this is a good strategy for you, because all of you have different circumstances and situation. So making the contributions to an IRA could lead to a decrease in the deductible portion of your QCD. And the QCD will be reported as a death distribution for inherited IRAs. So definitely talk to your accountant to see what that means for you. And the last birthday that I want to share with you today is your 73rd birthday, where you're going to secure your required minimum distributions. And these are the minimum amounts that you have to withdraw from your retirement accounts every year. So what happened was, generally the RMDs began at the age of 72 prior to 2023, but then Secure 2.0 Act raised that age to 73 for taxpayers who reached at the age of 72 after December 31st, 2022. And now it's also raised to age 75 for those who turn 74 after December 31st of 2032. So the change, basically, the reason is the change is going to provide retirees more time to let their retirement savings go tax-free. It just gives you more time to be left in the stock market. So individuals with these accounts must generally take the required minimum distributions. If you have traditional IRA, inherited SEP, 401k, 403b, 457b, profit sharing plans, and other defined contribution plans. Note that the Roth IRAs are not subject to the required minimum distribution. And another important change is that the penalty for not taking the RMD has been significantly reduced from 50% to 25% of the amount of the RMD the individual is supposed to make. So definitely think about these things and set yourself reminders, which brings me to my next point. So I gave you all the birthdays. This was the main topic that I wanted to share with you today. And what brings me to my next point is the fact that you may get frustrated because it's remembering a lot of things. And this is just not about retirement, but it's also about daily living and things that we have to do, and family and friends and so forth. And I really encourage you to rely on the Google Calendar. It is a living, breathing document program. It's free for you to use. And the great thing about it is that the way you set it up is going to remind you, whether you want that as a pop-up on your phone or you want that as an email, it's going to remind you whatever it is that you want to do. I rely on my Google Calendar for quite a few things, and each family member that we have has their own calendar, and I have a calendar for my business as well. This way I remember my appointments, and the calendar reminds me an hour prior to all of my engagement appointments. That way I have the time to sit down, catch your breath, and prepare for whatever I have ahead. So I encourage you to do the same. Using Google Calendar, it's easy to use. It has different colors that you can use. You can set reminders for every day, for weekly, monthly, yearly, and then there's also lots of custom options as well. So my suggestion to you is, in particular to this list of birthdays, is just set them up, and then what you can do is in the description section for that reminder, just write down why that birthday is particularly important and why it would be maybe relevant to you, and add any notes that you want to remember, that when that pop-up comes up as a reminder in your calendar, you're going to look at that description box and you're going to realize exactly why it was there in the first place, like what's important. You can add any notes, you can add even attachments if you want, links to a website. It's very easy to use and it's very helpful, so that way you can keep all your notes instead of all that information rattling in your head. So That's my suggestion. I'm a big believer in using helpful and free tools to make your life easier. That's what we're talking about here. My goal is to help you make your retirement planning a little bit easier. Now, the second part that I wanted to talk to you today is we're getting ready to wrap up the month of June, which means we're getting ready to wrap up the first half of the year. And it is time for us all, whether you're retiring or if you are in a different generation, is to do a 6-month of the year review. How has the first 6 months go? What did you accomplish? Where did you slack off for one reason to the other? So I have some thoughts about this for you that I just wanted to kind of put it out there for you so that way you can jot it down and see what makes sense for you and what's relevant for you. So the perfect opportunity right now, what we're going to do is assess a stock of your financial situation. This is where you're going to take a look and reflect on the progress that you've made. And this is when you make adjustments for the next 6 months or so. A lot of the times, if you don't want to think so far out, it's easier to think on a monthly basis or quarterly basis, right? So decide on what makes sense for you. Just don't make it, again, overcomplicated. So first, my recommendation to you is to start with your budget and expenses. As you know, I'm a big believer in having a budget because it is like a foundation for your house. You just need to know what you have and what things do you have in place in order to save up and have your funds grow to help you and support you in the retirement. And the same thing with expenses. So the question I have for you guys is, we talk about budget and expenses, but how many of you also have a net worth spreadsheet? If you don't, I'm going to link one that I use under this video. The recommendation really is for you to review your net worth every month on a regular basis. I have that as a reminder in my calendar on the 1st and 2nd of the month. Is just like a little memory jogger. Review your net worth sheet. And it's really very easy. It's all of the assets that you have, checking accounts, the houses that you own, savings accounts, your stocks, your IRAs, everything. That is your asset class. And then underneath that, you're going to put all your debt. If you still have outstanding mortgage, if you have car loan, if you still have college loans, whether they're yours or you co-signed for someone else, anything that you're making payments on a regular basis goes into your debt. And then you subtract your assets total from your debt total, and what's left over is your net worth. The goal is for you to see your net worth grow month after month. And if it's not growing, this is where you can take a look and see and evaluate. Could it be that your expenses were too high for the first 6 months for whatever the reason? And what was that reason? So I'm going to link my net worth spreadsheet for you under this video, so that way you can give it a try yourself and add that to your planning for what you have going on right now, and as well as planning for the future. So my suggestion is for you to compare your actual spending against your budget for the first half of the year, so you can identify the areas where you either overspent or you underspent. And I'll give you a perfect example. I had no plans on purchasing new tires for my car. However, that was the necessity just last week. I have an SUV. So when we went and I got everything measured and figured out what the problem was, the shop told me that I need new tires. So $1,000 later, I have new tires. Everything is great with my car, but now this is the expense that I wasn't planning for. However, it has to be planned in my budget and in my expenses. And there are rebates that I'm going to take advantage of course, but it's $1,000 that was not in my budget for the month of June. So things like that, think that they may come up that you don't know about. And unfortunately, many times they do come up on a regular basis, if not every month. So you just have to be mindful about them and add them to your spreadsheet, so that way you can see how your numbers fluctuate every month. Also think about how your budget may shift from winter, spring months into the summer months, and see if you need to adjust your budget categories as needed to reflect any changes in your lifestyle or your financial priorities. So if you think about it, for example, in the winter, if you had a busy gifting season, in the month of November and December, typically those bills come in January and February, which means you're going to have heavy expenses when you're paying those bills. That's going to put you in the winter. Perhaps you have a college graduation or prom that is coming up. That's going to be May and June. And then if you're having a vacation in the summertime, that's going to be another big expense. So you just need to be mindful of what these expenses are. And you just have to be prepared and know that they're there. And how is that going to affect your overall picture? Another good idea, if you want to do this on the move and have access to this information, look into some budgeting apps or tools to help you streamline this process. I like a basic spreadsheet that itemizes things, and then it has the formulas already built in where you can take a look and see total expenses, and it might tell you where the expenses were too much, and then you can highlight them, because I like to use different colors. But if you are more of an app person or you'd like to see those things on the phone, then you can log in on the computer, but then you can also see the same figures and numbers on your phone. So that's, of course, going to be your preference. Next suggestion is to review your retirement account, stocks, checking, and savings account. How is the market doing so far? How are your investments doing? Did you lose a lot of money? Did you use a little bit of money? Or you made some really good money? Is there a need for you to perhaps rebalance your portfolio? If you are trying to have maybe a more aggressive or maybe more conservative mix, whether you have stocks and bonds, do you need to potentially rebalance because certain stocks made a lot more money? So that is a time frame for you to look at and say, do I need to do that? And right mid-year review, which is what we're talking about now, is a good idea to do. Same thing with retirement accounts. Take a look and see where you're at. If you have mix there as well, see if the funds making your money makes sense to you. Month of June is also a great time to revisit your January resolutions that you made. So if you made plans in January and you said that you were super excited about certain things, then if you have slacked off, I want you to go back and review that list and see why. Is it maybe because it was too stringent? If you told yourself you're going to go to the gym every week, or you were going to completely revamp your diet, whatever that may be, I want you to take a look at it and say, okay, so what can I do for the next 6 months I feel that I still accomplished something? And the resolutions can be split in different categories. You can have a list of things that you want to do with your family, a list of things that you want personally to do, some things that are interest to you. Perhaps you have a list for your business or a list for your friends, which is actually, I think, is a funner way to do the list, because then you have a fulfillment in different areas of life that you have, as well as with different people that are important to you. So if you haven't done anything, I don't want you to beat yourself up. I just want you to say, you know what? It is what it is. You can't change what happened in the past, but you can change what is happening for the next 6 months. So think about little things that you can take from that list and say, you know what? I have 6 months. If I implement 2 things from each of my lists, that's going to make a successful year for me. And then this is what you can actually put down. And again, this is where you can use the trusty Google Calendar to actually put things on paper and say, you know what? Next month, I'm going to get together with my family. We're going to plan that vacation that we wanted to take in October. Or if you wanted to try hot yoga as an example, because that's something that's on my list that I haven't done yet, is I don't know if I want to do it in the summer, but perhaps in October or November. So I'm going to put a reminder for myself on October 1st in my Google Calendar to say, okay, look for a hot yoga studio so I can go ahead and find a class that I want to try. So, and that's how you remind yourself and you don't forget, and that's how things are going to get done on your list. We talked about savings, and I want you to look at your savings balances, and also I want you to review the interest rates that you are earning on your savings accounts. If they are anything below 3%, which is the cost of living adjustment, the inflation rate currently, you're actually not making money, you're losing money. So I encourage you to do some research to see which checking and savings accounts that are available online, and there are plenty of them that are paying 4% and 5% right now, so that way you're actually making money on your money. I recommend that you go to a website called raisin.com, and raisin as in a dry grape, and you can check and see what are some options there. I'm also a big fan of Marcus, marcus.com. That's where I have some savings as well. They're paying a pretty decent yield rate as well. So what I'm referring to is, instead of putting your money into a regular savings account with your local big bank that doesn't pay you anything, you actually get pennies. Look for some banks online that you can take advantage of, where you have high yield savings accounts, and those are the accounts that are going to help you earn more money on the savings that you have in your plans. Also, be mindful about and prepare for the upcoming expenses. It's always a good idea to anticipate major expenses, especially for the second part of the year. I'm going to have college expenses coming up in August, so I have to be mindful about that. As an example, you have holidays and vacations coming up, so think about those and make some plans ahead of time. It's always better to know ahead and make some plans rather than be blindsided and then be in a shock after the fact when you are already receiving that bill. So suggestion is, start setting aside some money now to avoid the financial stress later. And you can do that little by little, whether it's a weekly plan or it's a monthly plan. So that's going to help you build that financial buffer, so that way you're not feeling stressed out. So I already mentioned to you during the birthday segment about doing the catch-up contributions and also doing contributions to your traditional Roth IRA. I'm a big fan of Roth IRAs. So 2024 contribution limit is $7,000 for the year. So please don't think about this as a one big number. I want you to break it down in manageable things. So for example, $7,000 in 1 month is $583. If you really want to make it super simple, if you divide 583 divided by 4, every week, it's only $145 that you need to contribute and set aside. That's it, $145. And then all $7,000 that you will have in that Roth IRA is going to grow in your account tax-free forever. And you know what? The best gift you have on these IRAs is a gift of time and the compound effect, where the money makes money with the money. If you are able to do a catch-up for 2024, because you are age 50 and older, you have an extra $1,000 that you can tuck into those accounts. And that puts you up a total of $8,000, which is $667 per month. And that's going to be $167 per week. That's it. That's all you have to do. $167 a week. It's probably cost of someone to go out and have dinner for one night. So I want you to think about that and potentially invest that money into the Roth IRA, which is going to be definitely more productive. Month of June is also a reminder for quarterly estimated tax payments that are due for some of the business owners and those that are self-employed. So you guys know who you are and what that means, but I just wanted to put that as a reminder. So what I also wanted to tell you is, when we figured out $167, put that as a weekly reminder, put that as a monthly reminder. This way you don't forget. Put money aside for my Roth IRA account. Here's how much I'm going to do. $167 per month, or a little bit less if you are under the age of 50. So use that Google Calendar as a reminder. It's very helpful. Also, don't forget, we want to make sure that we're not just taking care of our financial health with the mid-year review, but also this month we are maintaining and taking care of our house, which is the biggest investment that you have. So don't forget that the home that you live in grows older with you every day. Things get older. Your major items are growing to be more mature, and eventually they're going to break and you're going to have to replace them. So be always mindful about it. And this is why I always talk about doing home maintenance on your home, sometimes weekly, because we all live there. And we bring stuff home all the time and we use things on a regular basis. So weekly and definitely monthly. So I actually have a home maintenance checklist that I provide to all of my clients. And of course, I'm going to link it. This is part of my of the links that I have under every video that you guys have on this channel, that you can download it and hang it on your fridge so that way you'll never forget. And again, this is where the Google Calendar can come in handy, where you set a reminder for yourself. Let's say set a reminder on the 15th of every month and make yourself a list of things that you need to do. And that is going to be your to-do list for that upcoming weekend during that second week. And if you don't get done on the second week, then you can push it off until the third week. That gives you kind of a little bit of a buffer to actually get those important home maintenance items that month, because next month there's going to be a new list. So we try to spread it so that way it's not a lot, but maintaining your home is extremely important because it is your biggest investment, and it should be a big part of your retirement strategy. And if you don't maintain your home, you're not going to be able to get the most amount of money for your home. And that is very important. So here's what's on the list for this month that I can tell you. You need to clean your range hood filters. You need to clean your dryer vent lint trap. I am adamant about doing this every month because it's the number one fire hazard that we have in our home. So please do that. It's easy to do. Clean your garbage disposal. You need to clean your microwave and oven, sink drains, range hood filters. And once a month, I want you to really walk around your home and inspect it on the exterior. The weather, bad weather, wind, storms, rain, you don't realize that sometimes things get damaged until something big happens. By you doing the exterior inspection on the regular basis is going to solve those problems, because you're going to catch it when it's still a small item before it becomes a big and costly issue. For the month of June in particular, so the list that I gave you before is something that you do every month. So for the month of June, I want you to check your carbon monoxide and smoke alarms and make sure that you have fresh batteries in there. If you haven't changed the batteries in a while, please do that, because you know that they're going to make sounds and beep when it's the middle of the night. I swear, I don't know how they know, but that always happens with people. So this way you don't get frustrated and upset because you have to do it in the middle of the night. Do that twice a year and you'll be in good shape. You also need to clean your fan blades. People don't realize how much dust accumulates on them. And especially in the summertime, where I always recommend that you use the fan blades to help you circulate the air, because it's also going to make your rooms cooler as well. And also my suggestion to you is do a deep inside clean of your home, because when it's summertime, you can open up the windows. It's nice outside, so it's an opportunity for you to kind of dive in deeper and clean some things that you don't get to on the regular basis. Shampoo the carpet if you have it. You'll be surprised how dirty the carpet gets. And the reason why you want to do it in the summer is so that way you have the fans to blow and help you and get that carpet dry as quickly as possible. And the last item suggestion for you is for you to drain your water heater. It's not something that I'm sure you guys hear on a regular basis, but if you want to expand the life of your water heater, you may want to drain it once a year to get rid of the sediment. Also, depending on where you live in the country, you may have harder water, softer water that has more or less minerals, and that makes a difference also in the life of your water heater. It's not hard to do. There are a few videos right on YouTube that I have watched that made it very simple, that I'm also going to link for you that you can do. You just need a hose and maybe a helping hand, but you can definitely do it yourself. So the hack that I'm just going to kind of repeat again is using your Google Calendar. I know I give you a lot of things of stuff to do, but if you want to simplify it so that way it's not rattling like marbles in your head, is to just to put all of the stuff in your Google Calendar, and it's going to remind you on the regular basis of what you need to do. And then you have that in the email list if you want, and then you can just print it out and then you just get to it. And I guarantee you, when you do these things on the regular basis and you take care of these things, you are going to save yourself time and money and frustration. And especially when it comes to the house maintenance, take care of the things when there are just small concerns and issues before they become huge issues that are going to cost you thousands of dollars, especially when you are dealing with, when you inspect the home, when you're walking around on the outside. The damage can be small in the beginning, but then it can really increase if you don't pay attention to it and you don't notice it. So Google Calendar is to the rescue. And I do use a regular planner as well to write things down, because that's what I like to do. But the paper planner cannot remind you of things, right? So this is why having an electronic living program that is free to you, by the way, is a really good idea to make your life easier. So this is what I have to share with you today. So we talked about different birthdays for you to remember as you are in the midst of retirement planning or living your golden years. And we talked about doing a mid-year kind of catch-up review, taking a look at things and see where you are right now. We're at the end of the month of June, and now we're going to start the second part of the year. How can we make small adjustments to what we have right now to still help you have a good and successful and fulfilling year? So that is the goal, and this is why we're doing this at the end of June, right before the second part of the year starts. So that way, when you get to November and December, you're going to feel happy and excited because you did the review and you were able to make some adjustments. And those adjustments are still propelling you forward. And that really is the goal. Little by little, it's not going to be perfection, but it's going to be progress that you can still accomplish things that you have set out to accomplish. So what questions do you have pertaining to retirement planning or financial planning that I can answer? Or, of course, anything pertaining to housing market or to your home, your community, the values, you're welcome to pop in before we sign off. All right, it looks like we don't have any questions. I hope that you found this information helpful. Always an open book. You have my contact information. You can always reach out to me with any questions. If I can help you with anything that pertains to your community, to your home values, overall housing market, I am here to provide the resources and to help you make your life easier. And of course, part of that is planning for your retirement as best as possible. So thank you so much for joining me today. We will see you next week. Bye-bye.